Back on Morning Movers. We've got more tech earnings in focus after the close today. One of those being Dell. Shares have climbed 70% from its 52-week low. It's all at the beginning of April, but it's down 1% on the year. For the upcoming report, the company is expecting adjusted EPS of $1.72 on revenue of more than $23.1 billion. Guidance will be in focus, with one analyst from Susquehanna expecting its July quarter outlook to come in well below street estimates. Time now for our chart of the day, options corner. Joining us to take a deeper look at Dell is Rick Ducat, lead market technician. So, Rick, talk to us about the trends you're paying attention to on the chart.
Certainly. Dell underperforming the technology sector and the S&P 500. Those are pretty tightly, in tandem with each other. So Dell's lackluster performance during the past year kind of stands out. But, perhaps we're in for a turnaround today here. We can see that with earnings, Dell is rallying in the pre-market. The recent moves here during the past week have taken us above this downward sloping trend line, a pretty mild, gradual slope that began with this gap down that we saw here 2 earnings ago. So now we can see as well, price has risen above all 3 of our moving averages. The faster moving averages are starting to overtake the slower ones as well, which suggests trend improvement here. We have rallied off of those lows near 66.25, as you said here, about 71%. So a very sharp rally for this tech name here. Also, NVIDIA earnings said, the increased demand would be good for server companies like Dell too. So there could be some other positive catalysts in this name.
Okay, so potentially some other positive catalysts. Anything you're noticing when it comes to recent volume?
Yeah, so if we were to look first here at our volume profile study, we can see that price is quite close to the point of control right here, the area of heaviest trading near about 117. We have risen above our +1 standard deviation channel. That sets the stage for this red line here, 130, a post-gap high point. It's where volume starts to pick up again, and it's our +2 standard deviation channel. So this is a notable area.
All right, that's a notable area. So then, okay, now how would you go about an example trade for Dell, given that we've got earnings in front of us?
Yeah, well, earnings are up. It's seeming like there are some positive catalysts potentially for this company here. So this example trade takes a more bullish stance here, and it focuses really on that 130 level that we highlighted earlier. There's high open interest for the next couple months between about 100 to 150 or so on the call side. So it's a decently sized range here. But we would look at +1 July 18th, 125, 130 call vertical at a 150 debit. So buying the 125, selling the 130 calls, you're paying a 150 debit here. Your max loss would be about 350 or so. So roughly 1 to 3 in terms of risk versus reward here. You can see our shaded area that shows the expected move encompasses the max profit area pretty comfortably here. So that would be certainly not out of the question here if we do start to rally. Also, we're defined risk. So if things do start to fade, if we have some other troubles with this name here, we would not, lose the farm here on this particular trade. We can, manage our risk more carefully by incorporating the short option strategy with our long option.
All right, that's an example trade for Dell. Earnings due after the bell today. That's the Duke of Data himself, Rick Ducat. Thank you, Rick.